Assalamu'alaikum warahmatullahi wabarakatuh. Hello everyone. We're from Portofolio team. Before we discuss our materi about portfolio, we will introduce ourselves. My name is Luqman Hakim, and the two partner, my partner is Thoriq Habsyi and Rahmat Abdul Ghofur. Oke, langsung saja. Next. What is portfolio? Meaning of portfolio. The term portfolio is used in activity involving a number of fields of activity, each of which has a quite different meaning. This term is a Latinized form, a portofolio. Next. In general, portfolio, the meaning is a collection of work or achievement that represents self-development. The work or achievement can be the result of individual or group work, even company achievement. Okay, next. Harry Markowitz, according in theory of Harry Markowitz in 1952, in Muhammad Samsul, defines a portfolio as an investment in various financial instrument, or also called diversification. Okay, the next material will be presented by Kemas Ahmad Abdul Ghofur. To Kemas, time is yours.
Okay, thank you, Muhammad Luqman Hakim. I will continue this section. I will continue this presentation about understanding investment portfolio. An investment portfolio is a security that is owned by an individual or company as a way of investing or investing. Securities are evidence of account payable or evidence of owner of capital in the form of tradable securities. Next. In a portfolio, an investor can diversify into various investment products to generate optimal return and minimize risk. This is in accordance with the advice not to put all of eggs in one basket, so that all the eggs do not break if the break falls. With diversification, this risk borne in an investment can be reduced because all the money is not put into just one investment instrument. The more asset basket, the lower the risk. Okay, various investment portfolios. Direct investment investors whose own fund can buy a financial asset from the company directly. And indirect investment, those who have excess fund can make indirect investment by holding in the form of stock and bond intermediaries. Why do we need to form an investment portfolio? The portfolio will determine the return you want optimally. Stock portfolio is a collection of investment assets in the form of shares, whether owned by individuals or companies. There is another thing called portfolio management, which is how to manage a collection of assets to achieve investment goal. Okay, for the next will be continued by Thoriq Habsyi.
Okay, thank you. So next here I will explain about consideration before doing investment portfolio. The the first that we should do is investment objective and time frame. Before starting to invest, check what is the goal in the investment activities that we do. For example, to prepare wedding funds, thus we can estimate the time period required to raise money through investment and choose which investment product are suitable for that time period. Second, capital. Check back how much capital we have for investment. With limited capital, there are fewer choice of stock that we can buy. Not to mention there are trading costs even. So now we can easily find various investment product that requires low cost. The third, investor risk profile. The risk profile is divided into three, namely conservative, moderate, and aggressive. Conservative investors tend to avoid risk and choose safe investment product. And moderate investors have a moderate risk tolerance. Meanwhile, aggressive investors have a high risk tolerance because they pursue large returns. Usually, the greater the return on investment, the higher the level of risk. So the next is stock portfolio type. There are three types here. The first is growth portfolio. A growth portfolio is a portfolio that is structured to encourage the growth of the portfolio itself. Portfolios that focus on the growth of investment assets usually apply the principle of high risk, high return. The second, before that, this principle is used by a investor who dares to take high risk to get higher profits. The second type is income portfolio. Judging from the origin, the income portfolio is a portfolio that is more focused on securing regular income for investment rather than capital gain. Regular income in question can be the form of dividends, which are usually distributed by the company at a certain time period. However, not all companies regularly distribute dividends. The third type is value portfolio. A value portfolio is owned by an investor who buys shares at the lower price than other stock in the same industry. These stocks are often referred to as an undervalued stock because the price is also cheap. Usually, investor will hold the stock long enough to find a higher value than when they bought it. However, generally value portfolios have a higher risk because the price of these shares are relatively more volatile than other types of portfolio. So next is stock portfolio benefit. What is the benefit of stock portfolio? So here, if you have more than one stock asset, it will be easier to achieve the planned investment goal. However, this hope will be in vain if you do not pay attention to every stock asset you have. There is you only lose. So that's enough from us. The last we say, Wassalamu'alaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Waalaikumsalam warahmatullahi wabarakatuh.